Hello, wonderful viewers. Hello, my friends. Hello, dear. Guess what? Today is a beautiful day. My name is Helen Orejobi, your guide on this exciting exploration of life insurance. Today, we're embarking upon my very first series on this topic where we'll unravel the mysteries of, life insurance. Now, guess what? This is going to be an amazing, you know, one. And guess what? I want us to be excited about this. If you have to get your pen and paper so you can take notes, please do that, right? So it doesn't matter if you're seasoned financial pro or you're just diving into the world of insurance, or you're just here to know more about why you should get insurance and get the right protection. Now, guess what? This is the platform to be. I'm here to make it all clear and relatable to us. So let's get started on this enlightening journey about life insurance, right? Together. Let's get started on this journey together. Now, what is life insurance? Life insurance is a contractual, agreement. It's an agreement between an individual with the policy owner, right? The policy owner is the one, coming to say, hey, I want, to have an agreement with the company, which are the carriers, right? The insurance company. In exchange for regular premium payments, the insurance company agrees to provide a specified amount of money, right, or coverage, known as the death benefits, to designated beneficiaries, right, upon the death of the insured person. Now, this financial agreement or arrangement is designed to offer some form of safety net, some protection, right, and support to the loved ones and dependents of the policy owner in the event of their untimely demise. This is very, very crucial, right? There are certain purpose of life insurance, right? Number one of the major, or should I say the primary purpose of life insurance is to provide financial security and protection for the policy owners, right? For the policy owner, the policy holder, which is the same thing as a policy owner, right? It's to provide that security and protection, right? Say, for instance, something were to happen, right? The life insurance will kick in and ensure that your loved ones are not left, to suffer and wallow in poverty, or figuring how to take care of the financial burdens or the debts that you have left behind, right? So this is like your loved ones is what happens the aftermath of the policy owner's death, right? It's an act as, it's an act of, you know, peace of mind. I would like to say, yeah, let me just try to simplify it. Life insurance gives you that peace of mind. It acts as a safeguard against the economic impact that can arise from the loss of a family primary income earner, right? Or a contributing member. Whoever that income earner is, could be the wife, could be the husband. Guess what? If anything were to happen to the income earner, life insurance gives you a financial cushion to help you while you are in that trying time. At least you're crying, you're going through all the stress of a loved one leaving. But guess what? Your family is going to be comforted knowing that you're not going to add financial burden to that equation. The death benefit that is going to be paid out or received by the beneficiaries can be utilized to cover various financial obligations, including but not limited to number one, funeral expense, right? Life insurance funds can be used to cover the costs associated with the funerals and, any other ceremonies that may arise, like the final expense. If you have old people, you need to get them a coverage that takes care of this, right? Number two, right? It helps in covering outstanding debts. The debt benefits can be, employed towards settling any outstanding debts, such as mortgages, loans, or credit cards balances, preventing the burden from passing from the surviving family members, right? Now, ain't that a good thing, right? This is amazing. Number three, right? Guess what? It helps in living expense. Life insurance helps maintain the family's standard of living by replacing the lost income, ensuring that daily expenses, including housing, utilities, and education, and what have you, next. That is amazing, right? Number four, right? Life insurance helps to pay for the cost of education. For families with children, you want to have life insurance that in case anything were to happen, life, changes were to happen to you, at least life insurance proceed can be allocated to cover the educational expense, ensuring that the children's academics, are taken care of, their aspirations are still held. They're not saying, oh, because my dad or my mom, who was a breadwinner, is no more now, I don't have to go to school. They get to drop out. If your dream as a parent is to give your children, quality education, now tell you what, you want to make sure that they have the right protection that covers, every bill. Make sure that their dreams are met even when you are not there. Number five, right? It helps you with your estate taxes. In estate planning, life insurance can be strategically used to offset potential estate taxes, right? Preventing more of, any of the things like all the life changes, like I mentioned, right? If you have any issue, say you have anything that is wrong with you right now, say, okay, you have a property, right? You have a property and you were to pass on, right? Now I'll tell you how life insurance can come in. Life insurance can help offset potential estate taxes, preserving more of the estates for their heirs, right? We know America is a system where you get to still pay property tax. Now, have you thought about that, right? By providing a financial safety net, life insurance offers peace of mind. I said this. It offers peace of mind, knowing fully well that, everyone that you left behind, your loved ones, your children, your spouse, have a degree of financial stability and support during a challenging or emotional trying time. Life insurance is a crucial component of, responsible financial planning, offering a tangible means to take care and protect those that you love, right? Now, if you love your family, if you say you love your family, it's goes beyond, word of mouth. It's a big deal. It's a big deal. You want to make sure that you're putting the right protection on them. Now, guess what? Now, I want to talk to us today. Like I said, it's going to be more on the basics. I want to keep it very simple for those of us that do not know what it means. I want to keep it very simple so we can understand what these basics are, right? So now moving on real quick. Now, guess what? They're statistically proven, right? The statistically proven that, guess what? In your lifetime, in my lifetime, right? In our lifetime, that one or two factors will affect us and try to stop us from attaining, our life's goal and whatever. But guess what? In the US, because a lot of people are working so hard, neglecting the most important thing. It's about 70% of Americans, right, within the ages of 65 and older, they will need some form of long-term care. That is why life insurance is important. Now, ask yourself, if the amount is about 70%, what happens, right? It only tells you that about 30% are thinking about it or have done something about it, right? What happens to this large amount of people? 70%, that's an amount that is mind-blowing. Now, these people need long-term care because they are in their retirement, right? They need long-term care to make sure that they are properly protected, right? Another statistic says one person dies every 60 seconds in the US from cardiovascular diseases. This is amazing. This is mind-blowing figures. This is the truth because a lot of people work so hard. We eat all kinds of stuff. We do not take care of our bodies. Now, yes, I give it up to those that are very, very into their health, the people that are taking, drastic steps to make sure that they do some works, they know what they eat, they hit the gym. But guess what, right? In Every, in America, every day, if not an hour or second, every, 1 out of 4 deaths in the US, right, is caused by heart disease. This is crucial. So we need to start watching, our eating habit, watching our habit, watching our patterns, and try to retrace our step. Maybe you need to eat more fruits, you need to work out more, you need to cut down some calories, you need to, check yourself. What am I doing right now that is creating, that's opening up this, respect age. I see people as young as 20 something having a heart disease. This is crucial. This is mind-blowing. This is devastating, right? Every 40 seconds, someone has a heart attack, right? Due to high cholesterol, due to medical issues that they're neglecting because they're chasing the dollar, clocking in and clocking out, and avoiding to doing what is, what you're supposed to do, right? You keep clocking in and clocking out and refusing to do the needful, right? Now, guess what? 8 out of 10 people are underinsured. This is not a good thing to do. Now, the question I want to ask you now is, what is the chance that this wouldn't be you? What is the chance that you're not in this statistic, right? Take a quick second, think about it, and let's get back to the next one. So quickly, I don't want to waste our time. Let's dive into the next, points that I have to put out here, which is we have different components of life insurance, right? Now, what are the components, right? There's something called the policy owner. A policy owner is the same person or the same as a policy holder. The person who owns the life insurance policy is known as a policy owner or a policy holder. Now, the insured is an individual whose life is covered by the policy. It doesn't necessarily have to be the same person that owns it or that bought it, right? And insured can be a child, it can be a spouse, it can be, an employee. You see what I mean? Now, the owner is kind of like different from the insured. Now, the beneficiary, this is the person or entity who receives the death benefits when the insured passes. Note that I said entity, right? I mentioned entity. So what that means is a business can be a beneficiary, right? A charity can be a beneficiary, right? We'll dig into that on a later time. Now, contingent owner, right, is a secondary individual named to take over ownership if the primary owner is incapacitated, passes away, or willingly transfers ownership, right, to someone else, right? And guess what? There's another thing called contingent beneficiary. Contingent beneficiary or entity who is someone who receives or entity who receives the death benefit when the insured dies. Now you see, it's two things, right? Now let me tell you something. Somebody asked me something really quick recently. She said, can you elaborate on contingent ownership, right? Now, the purpose of having a contingent owner is two things, two purposes. One, incapacity or in debt. If the primary owner becomes incapacitated or dies, the contingent owner steps in to ensure that the policy remains active and that decisions regarding the policy can be made, right? Now, the second, purpose is for estate planning. Contingent owners, or contingent ownership is kind of like set up, right, as a part of estate planning strategy to facilitate the smooth transfer of assets and responsibility, right? That's why you do that. A contingent owner can be a cousin, can be parents, grandparents, can be siblings of the owner, right? Someone that takes, decisions, right? So when designating contingent owner, what are the two things you need to understand? You need to have one, you need to have proper documentation, right? You need to have proper documentation to make sure that whatever you specify in the life insurance policy is documented and is carried out, so they understand when that time comes. Now you need to have clear instructions. It's not just going to document things, and you need to put clear instructions that, hey, this is what I want to happen. When I see a lot of cases of this happening when you have young ones below 18, because an 18-year-old cannot, legally sign a contract. So they have to get, someone that would take over the ownership of the policy until the time the 18-year-old can legally sign contracts, right? So you have to have a clear and specified instruction, right, stating what you want the insurance company to do and the conditions under which the contingent owner can assume control, right? Now, number three thing that I want us to understand is there are rights and responsibilities of a contingent owner. Two things, two rights, right? Number one is policy management. The contingent owner gains control over managing the policy, including making decisions about beneficiary and accessing the policy's cash value. This is where, say, for instance, you have a cash value account like the Index Universal Life, right? The policy, has to be properly designed to have a contingent owner that will take control of whatever decision that has to be made. Now, number two, premiums payment. The contingent owner may assume responsibility for paying premiums, right? This is crucial. So you need to carefully review and understand the terms and conditions that are outlined in your life insurance policy regarding contingent ownership. In many cases, legal and professionals, advice is needed. Please do not quote me. I'm a financial professional. I can help you, but sometimes I would still direct you to an attorney or someone that is very good in, asset management, or someone that is good in leaving trust to ensure that you put extra protection on yourself, right? So now that is said, let's go to the next segment, which is, guess what? It is the types of life insurance, right? We have various types of life insurance. A lot of people just know one. Other people know the traditional one, which is the old one where you got to die before the beneficiary gets the money. But guess what? I'm about to bust your bubble. We have the new system. It's a new era. We have new designs, new policies upgraded with a lot of benefit. Now, guess what? Number one, right? We have term insurance, term life. Now, term life is, as it says, is a temporary life insurance. What that simply means is it gives you coverage for a specific term. Most term life could be 5 years, could be 10 years, could be 15, 20, 25, or 30 years, right? Now, that it's temporary, right? And the absence of cash value components is key for you to note. Now, for term life insurance, it's like you actually going to, pay for your car insurance. If you never have an accident, you never get a payout, right? So say you've been contributing to this policy for X amount of years, let's say maximum 30 years, you're a 30-year-old person right now, and you contributed for 30 years, you're going to be 60 as at the time the policy term lapses. That's the contract term you sign. Now, if you don't die at 60, you lose all what you contributed, the last 30 years, right? So some people decide, maybe because the other ones are quite pricey, blah, 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 depends on your age, depends on some things. Maybe you couldn't qualify due to health reasons, right? You want to go with what's available. You see what I mean? And then the only disadvantage, or there are more disadvantages, right, is that once you have a term life insurance and you turn 60, right, what that means is you will need to buy another term life insurance at age 60. So your premium will increase. So you're not going to have the same premium. Your premium you will need to buy at that age, right? Now, guess what? An example here that I put here is a young family with children opting for term life insurance to cover their mortgage and educational expense, right? This is very good. Now, guess what? Number two type of insurance is the whole life insurance. I hear a lot of people, they're advocating for the whole life because they say it's good. It has two types. Like it's a permanent life insurance, right? Don't get it twisted. A wonderful package is permanent life insurance that gives you coverage up until age 120, right? Now they have two types. They have the straight 20, they have the straight 100, right? Till the end of your life. That's what it simply means. And it also has some form of cash value that grows over time, right? But it's not really, really that much, right? And then guess what? Your premium remains the same. If you were paying $100 right now, when you got it, say you got it at 30 or 20, you're going to pay $100 every month till the end of your life, right? You won't stop paying until the end of your life. right? Remember I said there's straight 20 and there's 100. So it depends on the one you pick, right? Now, guess what? Your children can use the cash value that it gets to grow, to fund their education. So I see a lot of people do whole life for children and all that for even themselves. But I'll tell you, I'd rather you go for the third one. Now, the third one is the universal life insurance. Most people know it as the IUL. It's also a permanent life insurance that gives you flexibility with adjusted premiums and the death benefit also, right? You can adjust your death benefit, you can adjust your premium, you could go higher, you could go lower. They have the minimum benchmark and they have, you know, what we call the 7 pay, and they have the maximum guideline premium. And with this type of life insurance, you can avoid, if in as much as you play by the rule, you can stay within the tax bracket, right? You don't have to pay. There's something called minimum non-MEC, right? You don't have to pay, to maximum where it attracts you to pay taxes, right? So it's also a very good policy that you can use, to use as a savings. But guess what? It is not a guarantee for retirement, but this kind of policy, you could use it to fund whatever lifestyle. Like, for example, I said here, the business owner using universal life insurance as both protection and investment tool. It has an investment tool that you can use to structure an investment because it has compound interest, which is the eight wonders of the world. Now, let me give you more benefits why I love the Index Universal Life, right? Under the Universal Life account, we have Index Universal Life account, which is the IUL. Now, if you're using the IUL, now cash savings with compound interest, like I just mentioned, it gives you debt benefits, providing financial protection rather for your insured, right? For your family. It gives you that extra layer of protection. Now, guess what? It avoids probate. You have to use the one that is indexed, it avoids probate, right? What does probate mean? Probate is a system where they freeze your money in a court system for 2 months up until 2 years. Now, in that scenario, you see a lot of families do what we call the GoFundMe. They do WhatsApp committee of friends trying to raise funds to bury that loved one, even if they have money. Within that time frame, they want to use the monies that they frozen to make sure that they clear up your debts, right? If you have a lot of assets, it's going to take longer. If you don't have a lot, it's going to open up like quickly and go by. Now, guess what? You also have access to cash whenever and when for whatever you want to do tax-free. A lot of people use this as an infinite banking or the system called becoming your own bank. This is the same account, the Index Universal Life, that they use to achieve this kind of design. Now, and guess what? It has tax-free benefits. All proceeds from life insurance goes to the beneficiary tax-free. That is amazing. Now, no fear of losing your money because it's an index strategy. Your principal, whatever your premiums are that you contributed over the course of years, take for instance that 30-year-old, you can be guaranteed that your principal, whatever your contributions are, is not going to lose because it has some form of protection that protects you when the other market is going down. You're not going to go down. It locks your gains in, right? You're guaranteed you'll never lose money with this account, right? Your principal, by the way, you won't lose the principal. The principal will still stay fixed. And then guess what? It helps you to create generational wealth. Trust me. I see a lot of people buy things, buy asset, build, structures, take the cash value that has compound interest to go ahead and fund all the businesses, right? Now, guess what? Or even borrowing against your own money. This is the becoming your own bank strategy that I mentioned. That's another story for another day. I'm going to do a series on that. Now, guess what? For $1 Million Baby plans to secure your children's financial future, right? Making your children earliest retirements. Most children will see them becoming a millionaire at age 45, 30, depending on how it's structured, right? It's $1 Million Baby. Now, guess what? It's an autopilot because while you have this policy, it kicks in, right? The policy value can keep it going because if you use cash value, it can keep your policy going for some specific time, depending on how you use it. If you're not taking so much money out of the cash surrender, it can keep your coverage for a long time. Now guess what? College savings for life for your children. You could use this instead of doing the other ones that a lot of people do, the 529, right? Guess what? I'm a financial professional, so I would tell you about the product that I have. This is a very good product that your children can use as a college savings plan, right? And also retirement income for life. You could use the index universal, right, to structure a retirement income. But guess what? It is not a guarantee that the market will perform or the index will do well. If you want in a retirement portfolio, I would recommend you use what we call a fixed index annuity or an annuity, which is more for retirement. But just for the sake of this, there's a way we design this to make sure that you still get a distribution from your principal that you saved over the course of time. Now, guess what? This is the most important that I love so much about the new form, right? It gives you protection, which I call income replacement. If anything were to happen to you critically, chronically, or terminally, you get those kind of protection that protects you, from all of this. Now, guess what? A critical illness can be fatal, something like cancer, ALS, organ transplants, diabetes, all those other crazy stuff, HIV, major crazy stuff, cancer and all that, right? If you have any of those kind of illness and you have a letter or a note from a doctor, if a physician that's saying, hey, this person has this illness, you're going to get a payout while you are alive. It's not a death insurance. It has a living benefit, right? That is the most important thing I love about this product, right? About this policy. Now, guess what? If it's a chronic illness, if you are going through any of the six, which is you cannot do, if you're any of these six, you can't do any two out of these six. By the way, you cannot feed yourself, you can't eat, you cannot take your bath yourself, you cannot continent, you cannot use the bathroom, you cannot change your, dress yourself by yourself, or you need help to go back and forth. You will need this protection, right? Super fired up. If you have any of, you know, for chronic illness, you need to have at least two of any of the six, to be able to get a payout while you're alive. It's going to pay you annual, right? If you're unable to take your bath yourself, you're unable to feed yourself, you're unable to clothe yourself, like dress yourself up, if you're unable to continence, use the bathroom toileting, and if you're unable to move around from your bed, transfer yourself from the bed to the bathroom, move around, and you need a help from a qualified caregiver, right, to get, about your daily living activity. At those six, any of those six, right? If you're unable to do any two out of the six, it pays you out while you are alive. It's called living benefit. And if you have any terminal illness, say they told you that you have less than 24 months, some carriers 12 months to live, you're going to get a payout, right? That's the living benefit side of things. And then next is the variable life insurance. The cash value, in the variable life insurance is an investor who benefited, from the cash, the investment component of their variable life policy, and invested in sub accounts, allowing for potential growth. So you see, we have a lot of, benefits. We have a lot of types of insurance. Now, the importance of life insurance today, if I must buttress this right today, is number one, it gives you financial stability for your loved ones, right? Life insurance acts as a financial safety net, providing stability for beneficiaries, right? So guess what? In essence, life insurance is a very, very vital component of responsible financial planning, offering a safeguard for your family's future. So understanding the different types, right, of policies allows individuals to choose the one that aligns best with their needs, providing not, just protection, but also potential financial growth. By incorporating life insurance into your financial strategy, you create a resilient plan that ensures your loved ones are cared for regardless of life uncertainties. This is crucial. Now, I said this, right? Gives you financial stability for your loved ones. Life insurance, it acts as that safety net for you. Now, if you do not have a coverage, you're doing yourself a dissatisfaction. Now, number two, debt and expense coverage. Life insurance can cover outstanding debts, funeral expense, and other financial obligations. Number three, it gives you income replacement, like I said a couple of minutes ago. Life insurance is replacing the income of disease. Why your family member passes on? Guess what? Families endure, financial burdens if they don't have proper protection and they don't have money to fall back on. Now, what this does is say maybe the income earner that just passed was bringing in bi-weekly $5,000, dollars, or 2,005 every month. Let's use 2,005. That's something very reasonable. 2,005 a month. Now, what that means is in a month, you're getting 5,000 from that, breadwinner. So what life insurance does is if you get a payout, the person can say, hey, I wanted to replace the income. I don't want all the death benefits. Say maybe it was 100,000 or $1,000,000. I don't want that money to be paid out one time. I want a fraction to be paid out, right? They say, okay, upon my death, pay out 50 or 100,000 one time, and then spread out the remaining $1,000,000 for up to 25 years, 24 to 25 years. Now that family, that's household is going to be receiving bi-weekly or monthly 5,000. So the only thing you get to miss is you're missing the breadwinner himself. You're going to be holding on to the memories of your loved one. Why? You're not going to miss those financial, checks coming in, because guess what? You see, the thing is, if you're sick and you're going through emotional pain, downturns, and you have financial burden, that is double for your trouble, and you don't want none of that, right? Number four, for education and future planning, life insurance policy can be allocated for educational expense and future financial goals, especially for your children. If you have young ones, please get you life insurance. If you have a spouse, get life insurance on each other. Now, estate planning, strategically using life insurance in estate planning helps offset potential estate taxes, preserving more for their heirs, right? So you see, this is very crucial. This is one of the reasons why we do what we do. I'm super, super excited, right? We're running up very soon. Now, imagine life insurance as a powerful shield, right? Imagine, right? Just imagine life insurance as a powerful shield, a financial hero that steps in when life takes an unexpected turn. So let's break it down, right? Let's break down. Now, see yourself as the superhero in a role that feels like, it relates with you. Now, let's imagine you are the captain of your family ship. Let's imagine, right? You know how superheroes protect their cities. Well, think of yourself as the captain of your family ship. You are steering it and making sure everyone on board is safe and happy. Now, life insurance is like your superhero kick. It can also be that sidekick, right? Ensuring your ship sails smoothly, even if something happens to you, the captain, right? So imagine you are that captain of the ship. Would you want your ship to sink along with you, or you want your ship to be safe, right? Now, secondly, meet your sidekick, right? Meet your sidekick. Life insurance is your sidekick, right? Life insurance is your financial sidekick. I don't know how to buttress this enough. Life insurance, is designed, right, to catch your family if you can't be there, right? To catch them and to keep them safe. How does this work? Some people might ask me, how does this work? How does it catch my family when I'm not there? Every month you pay a small amount. We call this a premium, right? You pay this amount to your superhero life insurance company, In return, they promise you to give your family a big bag of money. We call it a death benefit, right? If something happens to you, they give your family that big bag, right? Don't you think you will be happy wherever you are if you can see them? Now, lastly, let's look at this. The superpower financial protection that it gives you financial protection. Now, why does your family need this big bag of money? Think about it. We'll still imagine, remember? It's like a safety net, right? If for any reason you are not around anymore, this money kicks in to cover important things in your life, like paying for the mortgage that you have, that's your house loan. Don't that sound nice to you? Now, guess what? Handling any debt like credit card debts or loans, and even making sure your kids go to school. Do you think you'll be comfortable knowing fully well that your children will need to change zip code to a different zip code, right? That you would never want for them? Because even if you're not at that zip code, your dream zip code, you want to make sure that your family gets to that place, right? Now, guess what? It gives you that protection. Now, see, I like to, talk about some family. Let's use the Johnson family for instance. Let's peek into the life of the Johnson family, right? My extended family, my dad's name was Johnson, or is Johnson, right? So now, say for Johnson family, right? Let's use my family for instance. Right, Mr. Johnson had life insurance, and one day when he wasn't around anymore, that superhero life insurance stepped in, right? Okay, let's use Mrs. Johnson because my mom is late, right? The superhero life insurance stepped in. The money it provided made sure the Johnsons could keep their house, continue the kids' education, and cover every day's expense without worry. I know when my mom was alive, she loved for us to have the best of life, right? So I know even if she's watching from heaven right now, she's super proud to know that her family is safeguarded. Now, ask yourself, if anything were to happen, right, would you want your family to receive that bag, or would you want your family to receive that eviction letter, or that's a reposition letter from your car, or foreclosure letter from the house? Is that what you would want for your family? Let's think this through. So to do a quick recap, life insurance in a nutshell, right, is simply term life insurance, right? It's a superhero. It provides you with financial future. You pay a little now and ensure that your family, your loved ones, they have a lot more better, right? Have a lot more later. Creating a safety net, not, wondering where our next paycheck is going to come from. You're going to keep your family ship sailing smoothly, even life, when life hits you with a storm, even when you go through that stormy season, you know that it will kick in terms of the fact that life insurance, or let's use the universal life insurance, right? Or the index universal life. Right now, you do not even need to be dead. What if you were sick? What if you're in a coma? What if you're incapacitated and you are still alive? Do you know that life insurance can still give your family that big bag that we're talking about, and ensure your family boat keeps going smoothly without any issue, right? Your family do not need to sell anything. They do not need to sell your assets to be able to take care of you or pay the bills. You just know that the company would hold on to the agreement that you signed with them and pay out the death benefit or part of the living benefit, so that you can use that to take care of yourself and recover, right? So think of life insurance as your family's financial hero, always ready to scoop in and save the day when they need to do that the most, right? Now, guess what? Guess what? Right? I'm just setting the pace for the next, episode, which is going to be understanding the choices, right? I want to set this pace for you. So I want you to stay tuned. Go watch my next video that says understanding the choices, so you can understand the choices that are available to you. I know I talked about it little by little, but I want to go in depth into it to show you the choices, show you that life insurance isn't a one size fit all deal, and will help you find, the perfect fit for you and your unique need. That's why I'm here. I'm a licensed financial professional here to help you tailor your need to a particular product. If you want, if your goal or your need is to have the term, I will tailor it to the term. If your goal is to have the, some form of investment, if you want to own your, your policy instead of renting like the term, you want to own a house like your universal life where you still have cash value and you can still have access to your money that you saved instead of losing it like the term. We can talk about that in the next section, and then you can book a free 30 minutes consultation with me. Let's look at what you currently have. If you do have life insurance, let's sit down and look at what you have to make sure that you're not underinsured. And if you don't have one, we are more than able to help you structure one. My team and I were more than able to structure one for you. We're licensed to do this in all 50 states in America, Canada, and Puerto Rico put together. And guess what? Get to, explore all these other options that I told you, right? So guess what? The next episode that I told you, make sure you come with your notes pad and ready to embark on this journey on the second episode of understanding the choices. Because guess what? When it comes to life insurance, the power is in your hands, right? The power is in your hands. And we're here to empower you to every step of the way. Stay tuned and ensure your family hero is ready for the action. I remain your financial professional, right? Helen Orejobi. My major goal is to pass on generational wealth from one generation to the other. Stay tuned, like, share, subscribe to my channel. Turn on the notification button when you hear me post videos so you can be one of the first to get the scoop. Remain blessed, right? Remain blessed. Bye-bye. I love you. Take care. Make sure that your health is your priority and every